In the world of investing, opportunities often arise when fear dominates the market. Right now, there are many quality stocks that are trading near their 52-week lows. Not because they're broken, but because market sentiment has temporarily turned against them. This creates a rare window for investors to pick up fundamentally strong companies at a discount. Buying low is a cornerstone of long-term wealth building, and with market volatility creating bargain prices, now might be the ideal moment to act before the rebound begins. And in this video, we're going to be going over 7 stocks that are trading close to their 52-week lows that you can buy right now at a discount. And this is a very popular strategy, especially ones by Warren Buffett, by being fearful when others are greedy and being greedy when others are fearful. So this means you want to buy stocks when everyone else is selling, and that has made Warren Buffett known for being one of the best investors in the world. Now, if we take a look at the Fear and Greed Index, we are at a point where it's extreme fear. The S&P 500 is down so much. Last Friday, it was down 6%, which is an insane drop. So many people are very bearish, and all of this uncertainty comes from the tariffs. So basically, everyone is preparing for the worst. They're selling out of their stocks to create their own cash positions because they're anticipating that prices are going to go up. Now, of course, not everyone has the opportunity to spend extra cash on stocks, but if you do have some extra cash laying around and are able to invest, now is the best time to buy stocks. So let's get into the top 7 stocks that I'm personally buying that are near 52-week lows. The first stock on our list is going to be Apple, which is trading at $188 per share as of recording this video. Now, Apple is one of my favorite stocks that I've been holding for such a long time. And if we take a look at the all-time chart, it is up 6-figure percentages, 146, 100,000%. Now, for people who got into Apple really early on, they have made a killing on this stock. And with how loyal Apple's fan base is, they end up buying any product that Apple releases at a steep price. And because of this, Apple is one of my favorite stocks because of their loyal fan base. And while the stock is up in the past year 11%, it still is down around $80 from its all-time highs of around $260. And one of the best things about Apple is it actually pays a dividend. Now, the dividend yield is not very high at 0.53%, but it's been growing its dividend for the past 10 years. So not only does the stock reward you with huge capital appreciation, you also get that nice quarterly dividend every single 3 months. And if we take a look at the dividend history, the last payout was in February of 2025 at a payout amount of 25 cents per share. And since 2015, it's slowly increased its dividend amount, which is very good to see for a growth company. Now, our next stock on our list is actually going to be a dividend ETF. How could we ever forget SCHD? Now, normally dividend stocks and dividend ETFs don't drop this big amount, and we're sitting at a price point of $25 per share, right around its 52-week low, which is actually $25.18. Its 52-week high was almost $30 per share, so this is a very great ETF to buy at a discount. And because of the share price drop, we have a higher dividend yield of 4.11%. And this ETF has been constantly growing its dividend over the long term. So I believe that SCHD is a great ETF to add to your portfolio or add more shares to dollar cost average down because it is so cheap right now, which means you don't have to pay as much money per share in order to get these sweet dividends every single 3 months. SCHD is known as the holy grail of dividends. And if you take a look at the all-time chart, you're getting that nice stock and capital appreciation in addition to 4% dividend yield currently. Next up on our list is going to be Google, which is sitting at a price point of $145 per share. Its 52-week high was $207, so we're sitting at a very good discount. And just like Apple, it has a very low dividend yield of 0.55%, but it's very nice to see that because we're getting this huge capital appreciation over the long term. So these dividends are just an added bonus. And of course, I personally have to invest in Google because I love using Google search every single day, as well as browsing YouTube and uploading YouTube videos. So we're definitely investing in their platforms. And our fourth stock on our list is also going to be another tech company. The tech sector has been hit very hard, so you're able to get so many tech stocks at a very cheap price. So Microsoft is sitting at its 52-week lows, and that is down $100 from its 52-week high of $468. In the past year, it's down 14%. Now this stock pays out a higher dividend yield compared to Apple and Google at 90.92%, which is equivalent to $3.32 for each share of Microsoft that you own. Now, just like Apple, I'm a huge fan of Microsoft products. I love using Windows laptops, but I also have a MacBook, so I'm invested in both of their products. Microsoft has been doing a lot in the AI space, especially with Copilot, and I can see them being very competitive with all their cloud and AI technology that they have been investing in heavily. And just like Apple, they've been growing their dividend for the past 10 years. So pretty soon, we're honestly going to be seeing a 1% dividend yield if they continue to grow their dividend yield over the long run. Now, our fourth stock on our list is going to be the S&P 500 index. Now, I just picked a random one. VOO is one of the most popular ones because of its low expense ratio of 0.03%. You can also invest in SPYI, the S&P 500 index, but most of these S&P 500 ETFs are all the same. Vanguard just has a very good reputation for a low expense ratio. At its peak, the S&P 500 for VOO was at $562 per share, so it is currently $100 below that. So if you're looking for a safe, reliable ETF, VOO is a great option to invest in. And if you already own shares, you can get shares at a cheaper price and lower your cost basis. If you're looking for one single stock or ETF to invest in, VOO is honestly one of the best funds out there that you can just pour all your money in because it has the top 500 companies in the United States. So we have exposure to companies such as Apple, Nvidia, Microsoft, Amazon, Meta, Google, Berkshire Hathaway, Broadcom, Tesla. And the best thing about it is it pays a dividend yield of 1.5%. So if you don't want to invest individually in Apple or Google or Microsoft, you can just buy VOO because some of the top holdings are those stocks. Apple is the number one at 7% of its holdings, and then Microsoft has almost 6% of its holdings, and then Google at 2%. But VOO is one of the best S&P 500 index funds, and you can just set it and forget it. Pour your money into this ETF and then check back on it in decades, and you will see that your portfolio has grown exponentially, especially if you leave dividend reinvesting on, as well as set weekly or monthly contributions to this ETF. You will soon see some serious growth in your portfolio. Now on to some other ETFs. We're on number 6. It is going to be JEPQ, the JP Morgan NASDAQ Equity Premium Income ETF. Now this is a bit different than some of the other stocks and ETFs on this list because it sells covered calls. It has options trading on top of its holdings. Now this does have exposure to the NASDAQ 100, so of course we're going to have tons of growth and tech companies, Apple, Microsoft, Nvidia, Amazon as its top holdings. But the main thing is our dividend yield. We're going to have a dividend yield of 12.38%. And the best thing about this ETF is it pays out monthly. This is a pure income ETF. You're getting those reliable dividends every single month. And our last payment was 54 cents per share on April 1st. Now, if we take a look at the chart, it is at its 52-week low of $46 per share, which is down about $12 from its all-time highs. And if we take a look at the all-time chart by zooming out, we can see that it does have some good capital appreciation as it moves with the market, the NASDAQ 100 index. So if you're looking for an income-focused ETF, JEPQ is one of the favorites among investors. Now, if we want a different ETF, we have the NEOS S&P 500 High Income ETF, SPYI, which has a dividend yield currently of 14%. Now, this is similar to JEPQ, except it has exposure to the S&P 500 index. So we're having all those stocks that are in that index in this portfolio, and then it sells covered calls on top of those funds. So we're sitting at our 52-week low, and if we zoom out, it did have some good capital appreciation since 2022. We do have to remember that this is a relatively new fund. It's only been out for a couple years now, but it's performed very well as an income ETF, and we can see it did have some capital appreciation during this nice bull market as it rose with the S&P 500 index. Now, of course, tons of stocks, tons of ETFs are tanking. The markets are not liking all these tariffs. So we're able to get a ton of stocks and ETFs at a very cheap price. And we're going to see the dividend yield as a consequence increase as well, because we're paying less money in order to get these monthly dividends. This is also a monthly paying ETF, which is very nice to see. And if we take a look at the dividend history, it's been paying around 50 cents per share every single month. So if you own 100 shares of this ETF, every single month, you're going to be pretty much getting an additional share. And if you continue to reinvest your dividends, you can see some serious growth over the long run. But a lot of people are buying this ETF and then using that income to pay off bills such as their phone bill, which is very nice to see. So there you have it, 7 ETFs and stocks that I'm going to be buying at 52-week lows, because this is a great buying opportunity, especially if you have some disposable income lying around. Most of people's wealth is built during bear markets.